Yeah, so my screen is visible to everyone, right? So we start typically with the US markets, then coming to UK and then the Indian markets. If you see, this is Dow Jones. Dow Jones was in momentum. It did give a trend line breakout on Thursday. Yesterday, our markets were closed, but Dow Jones has closed below it. So there is a possibility of a bull trap over there. There may be a little retracement. Maybe it'll pick up again after that. So we'll have to be a little watchful over there. Had this breakout sustained yesterday and weekly closing had been above the trend line, it would have been an excellent scenario for the world markets as well. So having said that, the S&P 500 also is consolidating last few weekdays while it is above the trend line. So the S&P 500 is better off. It is still stock wise is in good momentum. And then let's come to Nasdaq. Nasdaq has been in momentum, but again, it has been consolidating in a narrow range, a very narrow range for a last few days. And it is very normal for these kind of scenarios whenever there has been a substantial rally up. So market may not just move up immediately, but it will consolidate a little before it takes the next step ahead. Coming to the world markets, if you see Germany, DAX has been really holding up well. And DAX, the momentum is holding up on all time frames. The oscillator has been very strong on all time frames. So Germany is very, very well placed in the European markets. And this is a very, very important market as well. So Germany is holding pretty well. And apart from Germany, even the FTSE 100, that is UK 100, is in momentum. Finally, after a very long time, and it has seen a very steep recovery. So for a very long time, UK was not performing, but it has started performing well right now. Among the Asian markets, barring Korea, which is in momentum, other markets are very sideways. There has been no substantial movement in any other Asian markets currently apart from Korea. We'll just come back to our Indian markets. So if you see Nifty last week broke out above this trend line and it has been holding pretty well over there. Coming back to the way we look at market is we always look at market from the higher time frames first. So weekly, if you guys had attended my first session after April, where I had spoken about momentum and how the gears of the stocks and the market keep shifting for the momentum to pick up. The monthly of Nifty is at 60. Okay, 60 is once it crosses 60, the momentum shift happens. It gets into the top gear. And once the market on a monthly and weekly sustains above the 60 RSI, the momentum is very, very strong. So right now it is at 60. It has not really crossed 60. So there may be a little consolidation here because of that. But once it comfortably crosses 60 on monthly, the market basically only means to say that it is getting very strong and one should not worry. Weekly is a little sideways because the momentum is between third and fourth gear, fourth and fifth gear. It is not really in the top gear. So momentum is on, but it is more of a sideways thing. On the daily, it is in the top gear. But when it is in the top gear on daily, how long will the market sustain also depends on your longer term time frames. Since longer term, like monthly, is getting better. So we and we have a substantial rally. We almost had like 1,000 points rally in Nifty. And it has broken the trend line. And on another angle also is your VIX. The Indian VIX is quite low right now. When the VIX is very low, it only means the volatility is very low. And for the market, for a momentum to continue, volatility cannot be extremely low. Like extreme high volatility is a very bearish thing. A moderate VIX always helps the market to be in momentum. So that momentum on the VIX front also is a little slow right now. So we need to be a little watchful. So as VIX also stabilizes a little in the range of 12 to 14, 15 also will help the market substantially. And also the put call ratios of Nifty and Bank Nifty are quite high. So there, that front also, the sideways momentum will continue for a while before another fresh rally starts off. But having said that, it's not necessary that we'll see a drastic drop, or we may not see an upside. Generally, what happens is after a breakout like this, which has happened in Nifty, this is a trend line breakout. So whenever there is a breakout in the index or in a stock, the stock or the index generally tends to retest the breakout points. Now, in this case, this level was a breakout point, 16,662, and this trend line support. So it is possible that we may go up a little and retest this and then move up. So one of the reasons why last week we said that, we need to keep our positions hedged because market may come to 17,600 is only because of this, the retest which can happen. Nothing can go up one way. It has to go up in swings. And that swing comes, and when the breakout levels or the breakout point is tested and market reverses, it's an excellent opportunity for you to build up the positions at that time. It only makes us market much stronger. So now going forward, we need to watch out for this retest. If it happens, that's a best case scenario. If that does not happen, let's say it consolidate a little and then it'll move up. So that's a second case scenario that can happen right now. Bank Nifty, we have been saying for the last 2 weeks, has been better placed than Nifty. And Bank Nifty, there is no looking back. The momentum on almost all time frames has been very strong. And private bank index has given a breakout. Your private bank index has given a breakout. There's a nice, beautiful candle, also bearish, bullish candle that has formed. So your private banks also are very well placed. Your public sector banks also have given a breakout. So these are all on daily. This is just closing above the trend line. It has not really closed very strong, but PSU banks are in a better position than private banks, technically, like Bank of Baroda and Canara Bank, especially. So the momentum here can continue if these stocks hold above these current levels. We know that IT sector is weak, so tomorrow IT is going to open down. So if the market has to hold on, tomorrow Reliance and banks, especially HDFC Twins and ICICI, have to hold on to the market very strong for the markets to hold overall. Otherwise, there'll be heavy pressure for selling pressure, which is going to come from the IT index, with your TCS and Infosys falling. Now, among the other sectors that we feel right now, currently, auto momentum has been very strong and it is continuing. But in auto, apart from Tata Motors, TVS Motors, it's usually the ancillaries which are getting better. Apollo Tires is holding on. Cummins, yesterday's stop loss did get triggered, but overall, auto index and auto ancillaries are very well placed. Your FMCG is kind of slowing down because there are some divergences. So stock wise, like ITC and all are in momentum and they'll continue, but other the FMCG stocks may just consolidate now. Coming to IT index has not fallen the way stocks have fallen. Having said that, it does not mean that the index will not fall or the stocks will hold on because of this. Going forward, IT stocks will give you a very good opportunity to build up your longs. So if you are planning to buy IT stocks for long term, it'll be a good time to accumulate in the coming few days at the right levels. But this would be good for people who want to buy in equity, and please don't look at futures because it's not going to be a V-shaped recovery. Okay, because there is weakness in the sector, you will not see a big recovery happening in IT immediately. The news around IT is not even going to be strong in terms of the guidance, the way we have seen in Infosys and TCS. So don't expect a massive rally in IT immediately. So go easy with it. Go with equity. Futures, we anyway play for swing. So you can add on to futures only when there is some substantial recovery in that. Metals is another sector which has consolidated. There's a nice squeeze that is happening, and the moment it moves out of the squeeze, you'll get a lot of opportunity in the metal sector. Jindal Steel and Power is our primary focus right now. Tata Steel and SAIL are yet to build up versus all that. This is a way better place, Jindal Steel and Power. Another sector that has given a good momentum was your pharma. Pharma sector for now looks like it has bottomed out after the whole fall that has happened. And we have already traded Dr. Reddy's, DV's, Loris, not Loris, Granules, and these stocks. So we'll wait. The momentum in this is likely to continue because the weekly and monthly charts are yet to catch up. In certain stocks like Dr. Reddy's, it is already high and it's in good momentum. So there we don't have to worry. There are certain stocks like DVs and all which are at trend line resistance. They have not broken out. If they break out, you will get a brilliant opportunity to buy them even for a long term, apart from trading. So we'll just discuss those charts also. Before I take those charts up, Sonar will explain you the current positions that we have.
Oh, I'm not able to share. 1 second. Oh, yeah. Hi, good morning, everyone. Can you guys see my screen?
Yeah, we're able to see.
Yes, yes.
1 second.
Bank of Baroda.
Yeah, so first we'll start with Bank of Baroda. This was our call, on Thursday. So here it has again, like you can see on the trend line support, it has made a very good bullish candle. And the supply zone that I have marked here, it has already tested many times. Like you can just see it tested, this supply zone has been tested by Bank of Baroda 3 times. And now on the trend line, support, it is making this bullish candle. So we expect a good upside, and for positional also, Bank of Baroda looks very, very good to us. So whether future or equity, this is gonna hold. And you can see even the support is not very far off. So risk reward to enter this stock, we think like 168 to 166 is a very, very good support for Bank of Baroda. So I think the RR for this, stock is perfect. Second, I would like to take up Persistent. So the fact, like, I wanted to stay away from IT sector knowing that guidance is gonna be a little weak. But on the, Wednesday, when I gave a call, it tested, I mean, first it broke out and then it tested its trend line. And then, on top of it, it made a bullish harami. So bullish harami, 60% times it is successful and it gives a very significant upside. But unfortunately, because of TCS result, it kind of plunged to its support. First, it took a support to the trend line and then tried to reverse from there, but could not hold it. But you can see, as I'm reflecting it in my chart, there's a very, very strong support here. And it is just tested once. So it holds very good. And even if it comes to 4,239 or 4,324, we don't have to worry about it and panic, because the reversal would be strong and it's very much on the card. So as of now, I have really strong conviction in Persistence. Let's see how it pans out. But I analyzed everything and then shared the call in the group. So I'm still quite bullish about it. The only thing is a lot of negative news around IT sector, which is pulling this stock little down. But this support is a very significant support, and let's see if it holds on to it. Indian Hotel, we are bullish, and I think we have discussed many times about it. But if you guys still want me to just take it, I can explain you. Canara Bank, you can see there is a very, very good trend line. I mean, the breakout happened before, but that day it did not make a very good and convincing candle. So that's why we did not share our recommendation. But on Thursday, it is making a very good Marubozu candle on the trend line support and a breakout. So that shows that how strong this stock is gonna be in the coming days. Apollo Tires, it's quite good. It is not breaking its support, and above 331, 337, it can really do well. AB Capital, yeah, it is nicely building up. Balrampur Chini, actually, it was a very good pattern, and the breakout was also, we gave the call on the confirmed breakout, but unfortunately could not hold. And but still, you see that the pattern is intact, and it has closed above the neckline of this saucer pattern. So let's see if we find another reversal candle here and see in the coming days, we can re-enter Balrampur Chini. But in the coming months, sugar sector is gonna do well. And we are hoping that Balrampur Chini will just, move along with the sector. Cummins, one of our favorite stocks because it is very good on monthly and weekly, but unfortunately that on Thursday the stop loss was hit and we had to exit because of this gap. So the moment it went below this support line, and so we were thinking that it may kind of try to fill this gap and there'll be further downside in this, but fortunately it closed below this support closed above the support line, and we will enter it again if we see a nice reversal candle, and whatever loss probably we incurred because of the stop loss, we will try to recover it in this, the whole upside that is restored for this stock. I think I'm pretty much done with the stocks. The other stocks I have discussed many times. ICICI Bank, we gave the call right here at this candle, and it is moving as per our expectations and anticipation. So we are since it has already achieved our first target of 900, we are somehow expecting it to just try to go towards this 914, and 914 is a very strong resistance. So if the result is good, result is like round the corner, it is on the 24th April. So let's see how it behaves around this resistance line. If it is able to cross 914, then we'll definitely see a further upside in ICICI Bank. So yeah, I guess that's about that's it from my side. Any doubt regarding our stocks or our calls, we can probably discuss after the session is done. Mayur, you can take it over.
Just close your screen, I will.
Yeah.
So there are a couple of stocks that I want to explain here. If you guys see, Divi's Labs has been constantly falling. Every time it's trying to pull back a little and it makes a newer low. So right now also it has not made a higher high, that it has not crossed the previous highs. It has not crossed 3412 levels. Also, Divi's, if I draw the trend line, yesterday it tried to break out, but it has not been able to break out. So since we had exited somewhere, over here, not because of there was no follow-up volume, plus it was extended. This candle, what we see, we missed this, but it has stopped right at the resistance. It has not been able to cross it. So once this level gets crossed, it closes substantially above it, and it closes above this particular line over here. That's when we will consider buying and adding. So crossing this trend line, sustaining above that, and also these are two levels which are going to be very crucial for us to add on more to Divi's Lab. Until then, we'll avoid this, because if it opens below yesterday's low, then the fall is likely to continue in this. So this was one of the stocks which I was looking at. I wanted to show. Now a lot of discussion we are having around Infosys ADR, which has fallen. So Infosys has been consolidating in this range. If you see, it has not been able to move out of this range on either downside or upside. Right now with the news, the downside possibilities are quite high. So it is going to break this and fall. After it falls, it obviously is not going to be like it's going to go down probably 50% from here. I'm not saying it will not. It can go down. but the parameters that show that after this fall, it'll consolidate. When the parameters start giving signs of bottoming out and reversal, that's when we will start initiating buying for even long term. So right now, when Infosys falls, please don't jump into it to buy futures, because the momentum may not be very strong or very fast. The high possibilities will get stuck. So prefer equities over there. Buy in cash. That'll be safer. So Infosys is one stock which I wanted to show you guys. Second one I want to show you is HDFC Bank. Like Infosys was in that range, HDFC Bank has been also in a range. It is consolidating in this range for like couple of months now. Now it may test this second time, it will test this high. In the past also twice over here it has reversed. This was when the news of the merger of HDFC and HDFC Bank had come. It made a double top and it fell from there. See how double tops make very important levels to exit. So, and after that, the fall that has happened. It tried to recover again in Jan, but it did not cross the highs. It has fallen and consolidating from there. While HDFC, if you see the momentums that I talk about, the monthly momentum is above 60. It is in top gear. There is no second thoughts about it. Weekly also is in good momentum. The daily also is in high momentum, but daily it is safer to either buy on retracement from here, where the RSI on daily will close, come down a little, cool off. It'll give you an entry to move into the next swing, and the swing will hold because the monthly, weekly charts are strong. Alternate, if it breaks out above this level, once it breaks out above this level, HDFC is going to give you a fresh breakout, and that breakout is going to be of at least 200 points minimum. So if it breaks out above 1700, you're looking at a 1900 kind of a levels to buy HDFC, and having the second highest weightage on Nifty. So it's also going to support the Nifty from here. So Nifty now above 17,800 will go all the way up to 18,000, 18,200 with the support of HDFC Bank and Reliance itself. Now, couple of things that we have been repeating in the messages, we have been talking about even in the sessions, is always buy on rises. An example of Balrampur Chini and Cummins, when we say, buy about, once it crosses 324, then we said add more about 432. It did not cross 432. So let's say someone wants to buy 1,000 shares. You bought, let's say 200 shares or 250 shares in the first tranche. When it crosses the hurdle of 432, that's when you add more, because it has crossed that hurdle. It becomes stronger after it crosses that hurdle. And when you buy more above that time when it crosses 432, you can add higher quantities also. And then your stop loss, instead of 405, it comes to 415 kind. So even your downside gets capped. You have already bought a little on a lower level, then you're buying more at a higher level, and your downside gets capped. So buying on rises always helps, because the stock is in momentum. As the momentum picks up more, your strength in the on your buying by pyramiding gets even better for you to hold on to your positions. So that is very, very important, that you always buy on rises rather than buying on dip. Infosys will be a classic example where people start buying on dip. You don't know where the bottom is, and you'll just keep buying without a stop loss in place. And just because of this reason, intraday is something that we avoid. Now, I want to give an example. A lot of people keep asking us to give intraday calls. Intraday, the biggest problem is your risk reward is always 1:1 or 1:1.5 and not higher than that. In very few cases, it will be 1:2. If I have to give you a buy call on Nifty, I have to give you at least 25-30 points of stop loss plus 4-5 rupees of brokerage. So you have about 25 to 30 rupees downside. The upside will also be more or less around 25 to 50 points and not more. How many days are there in a week where Nifty is going to move more than 50-70 points after it has broken out? Very rare. It may just do about 100 points. And when we buy intraday, we do not hold on for that 50 points target. If it moves up 20-25 points also, we tend to book our profits. But on the downside, whenever it is falling, you will hold all the way till your stop loss is triggered. So generally, your risk reward is 1:1, or sometimes even less than 1:1. So your risk is always higher. Even if I have a 60% accuracy in intraday calls, considering the number of points I lose on every time there is a stop loss hit versus the number of points I book profit, you will never make substantial gains over there. So it is not worth having intraday too much of positions. Please focus more on positional swings because that will give you that comfort. Today, after this market review, I am going to talk about options, and after the option sessions also, I'm going to split it up into two. Today, one thing I'm going to teach is the basics of options and one particular buying strategy for options in swings. It also works in intraday, but these are the kind of strategies which you will have to learn and generate the calls at your end, because if we start giving you calls, the time delay in that, in buying and triggering the stop loss or exiting, can cause you certain losses. So I'll explain to you how to utilize these tools to do option buying strategies. You need to practice them at your end, and then you can start trading in them also. So now we'll just start with options. I just want everyone to have the cameras on, please. Guys, switch on your cameras. Thank you.
Because I am driving, so I got to switch it off.
No problem. So we'll take that as an exception.
Thank you.
Okay. So while you're driving, at least I know most of you do options. Can you please tell me what is options? How does options work? I'm sure all of you at least know that. Anyone?
We take a put or a call option depending on the price action, whether we need to go up or down.
Yeah, but what influences it?
Sorry?
What influences it and all?
Depending on the price action, we take this decision.
Price action, okay. Okay, so
Option chain. We look at the option chain and then decide what.
so what do you look at an option chain?
We look at the highest number, like highest percentage where it is trending. Like
Okay.
Open interest.
Okay. So I'll just come from the very basics of one who do not know. So you have index, you have stocks, then you have futures. Futures is nothing but a derivative of the index and the stocks. Like Nifty is there, Nifty is spot index. You have a futures of that, which is Nifty futures. Futures has a lot size, a predefined lot size. So you buy in multiples of those lots. The underlying asset of a equity or the stock futures is the index or the stock itself, right? So if index has to move up 100 points, even the futures would typically move up 100 points, right? Now the option is a derivative of the future. So option prices move at, along with the future prices. The underlying asset of the security of the option is your future. When I say that you need to buy an option, call option of at the money. So at the money, if Nifty is 17,800 and Nifty future is 17,850. So the at the money price of that particular option would be 17,850 and not 17,800, which is the index. You need to look at the future price. Future price is at the money price. The prevailing, the future price of an index or a security defines is what is your at the money price. So any strike price which is above the at the money price, let's say Nifty is futures is 17,850, 17,900 and above are all out of the money strike prices. Likewise, any price below 17,850 are all in the money strike prices. Getting that point? This is for call options. If I'm talking about a put option is nothing but going bearish. Instead of selling a futures, you're going to buy a put option.
खाना है, पैसा थोड़ी है। अभी आवाज मत करो प्लीज।
So in case of a put option, all the prices below the at the money price are out of the money, and all the prices above the above the at the money prices are in the money. Okay. So when you
Oh,
guys
Sunita Mausi. वो मेरे third drawer में है. एक minute.
Surabhi madam, mute.
yeah. Okay. Now, what are the factors that are influencing options in general are basically the price movements of the future itself. If the future is moving up or falling, the price of the options will move up or down, right? Like a future moves when a spot moves up, option also moves when the future moves up or down, right? Now, what are the major other factors that affect an options is nothing but your time, the number of days to expiry. Whenever you have a particular call or a put option in your hand, the price of that decays every single day as it comes closer to the expiry. That is called theta. Theta is nothing but the time decay because of the days coming closer to expiry. Today, if you buy, let's say, I'll give you an example. You guys are seeing my screen over here. So you have on the screen, if you guys can see, it is a 20th April, 17,850, which is the current at the money call option. If you buy this today, the price is 85 rupees approximately, right? Now, if I hold this position until expiry, right now it is in a loss of 1600 rupees, as you guys would be seeing over here. If I just move this towards expiry, just holding on to this position, my loss is going to increase because the price of the premium of the options will keep coming down as it comes closer to expiry. If I hold it till expiry 20th, I'm in a loss of 4,000. Even if Nifty moves up a little, I am not going to come into profit. Getting this? So the biggest challenge of option buying is the theta. Theta decay is the biggest hurdle in buying options. You guys are getting this over here?
Yes, sir. Okay.
Yeah.
Recording in progress.
If I just take another strike price, let's say of 17,950, which is at 42 rupees, even if Nifty goes up to 18,000 on Monday, I'll be in a profit of 2,672. But if I don't square off this position on Monday and I keep holding it till expiry, the profit will keep coming down. And this profit has come down to 770 on expiry. Why has this come down? Is not because the stock prices come down, but that is because of the theta decay. Theta decay causes the premium loss as in when you hold it till the expiry. Unless the stock is in the money, where the intrinsic value of the stock remains. When I say in the money, the position which I'm holding has gone below the at the money price. The strike price of what I'm holding is below the at the money price. Over there, the intrinsic value remains. Anything over and above at the money becomes zero on the day of the expiry towards close. So if you're holding something and that price does not go above that, or the price is consolidating in that range, the premium will go down to zero on the day of the expiry towards expiry by 3:30. So one of the reasons why we discourage option buying, and especially in the last 2 weeks, is because there's a massive premium decay. And in the current scenario where the VIX is very low, the IVs are low, the premium decay is much faster. Whatever we have been seeing in our strategies, the decay which is happening in just 2 days or 3 days is primarily because of the lower VIX. When the volatility is so low, the premium decay is very, very fast. So whatever positions you take, even if the price doesn't move up, you make your money by selling that particular option rather than holding it in such scenarios. Now, another thing that I want to show you people, why we say that option buying has to be very selective. Whenever you buy an option, we know that the profit is unlimited, the loss is capped to the maximum premium that you're paying. In this case, it is 4,000 rupees. One lot of Nifty at 85 rupees. You are just paying 4,200 rupees. So the amount of margin that you block also is very low, and profit chance, is unlimited. So people like to buy options more only because of the primary reason being that your investment is very low on a option trade versus a future. If you had to buy a future of Nifty, you would have probably block a margin of 1 lakh change. Here in one lot, I'm able to trying to make a profit of the similar kinds like a future by just blocking 4,000 rupees. But what we do not understand is the probability of profit is just 33%. In most cases, it is even less than 20%. So please understand that while your profit may be unlimited, your probability of profit is very, very low in option buying. I'm not saying you should not do option buying, but you need to know how and when to do it. One of the strategy of when to buy option, I will explain after this session. Now, let me do the same thing. Let me sell this option instead of buying it. Now, when I sell a call option, I'm going bearish, right? That all of you are aware of. So if I'm selling a 17,950 call option of the coming Thursday's expiry, I am only saying that, okay, Nifty, if it does not cross 17,950, I will, whatever the premium that I'm selling at 42 rupees will be my profit. Over here, approximately that is 2.2% of my capital. My margin needed is around 93,000. On 93,000, I'm going to make 2,000 rupees profit approximately. Now, I will start incurring loss only if Nifty on the day of expiry towards expiry time is about 17,950. If I am confident, I will take this position. But look at the difference versus buying. The probability of profit is 78%. Whereas in buying, the probability is 30% or even lower in most cases. So in option selling, the profitability will be very limited. The profit margins may be capped. Your losses may be unlimited, but your probability of profit is way higher. And as I have been I keep repeating, smaller consistent profit is what you need, but consistency is what you need with the smaller profits. Today, in the next week, I know Nifty may move to 17,950, which is little risky, but what are the chances of it crossing 18,200? So 18,200 call option is 4 rupees, right? I may make just 235 rupees. We have already taken positions here, so I'm just giving you an example. The probability of profit is 97%. So I will make 0.3% profit in the next 3 days, but my profit over here is limited, but it's going to be consistent. One of the reasons why we encourage option selling and deep out of the money option selling is because your probability of profit is way higher. You can do bulk transactions. In buying options, you may have, because if you're buying, let's say, a Nifty call option of premium of 50 rupees, day before yesterday, we gave a sell call. We asked you to buy a put. The put was around 80 rupees or 65 rupees, sorry. We had to give you a 30-point stop loss and about a 60-point upside. 1:2 was your risk reward. So if you lose money, you're losing 50% of your capital over there, unless you trail your stop loss, right? And if it moves up, you make your profit. But in case of option selling, though theoretically your maximum loss is very high, but when you are taking in a particular strategy, you understand how it is working, your profit is short. Your loss is very limited over there. The chances of your loss are very limited. Now, when I have given you guys a trade which was a strangle of 17,200, selling a 17,200 and upside 18,200, 18,400. So when I had given you guys this particular trade, the combined premium of these two was 13 rupees. Now it is 7 rupees. Now you understand that as long as Nifty before 20th of April is in the range of 17,243 to 18,307, you are going to make this 500 rupees of profit with when we had sold it. It is right now 365. Now only on the day of expiry or before the expiry, Nifty crosses below this or goes above this is when you start incurring losses. But this range is quite wide for you to actually start incurring. In a year, out of 52 weeks, there'll be 1 or 2 weeks where it goes out of your break-even range in this kind of a scenario. The range normally that I take for that 12 to 15 points range, if I take that range very narrow, let's say I just take 300 points on either side, the chances of it going out of the range in a week is very high. But I do not want to do that because I'm happy by sticking to my lower profit margin, but for the consistency. Now look at it, even if, on a day of expiry, if there's a 200 point run up in the stock in Nifty, I am not going to incur loss over here. But the same thing, if I was going to buy Nifty options, or I would have bought put options, my position would be stressed because of the time decay. My profit, even if I was in a profit, but if Nifty tends to fall 50 points on the day of expiry from the price which I have bought, I'll start incurring a loss. My premium will not hold on. So when to buy call options and how long to hold the call options is very important. It is not like futures where you can even roll over. In a call option, in option buying, it is not possible for you to roll over the positions also, because your next month's premiums will be extremely high. And it is not necessary the strategy you bought for this particular week will be applicable for the next week as well. So there's a challenge over there. Okay, so I just want to give examples as to when all of you want to buy call options or do option trading intraday or positional. What is the best way to do it is, obviously, apart from your option chains, is also using technical analysis, that is the charts. Now in this, I'll show you with Nifty first. You take, if you all of you have a trading software, Zerodha or whatever, in that charts are free, right? You open a chart. This is a simple candlestick chart. It's called a simple candlestick chart. Each of them is called one candle, which most of you are aware of. You have to add RSI, relative strength index. It is nothing but a momentum indicator. Like I tell you, it's like the gears of your car. It's like 0 to 40, 40 to 60, 60 to 80. Each of that range is like the gear shift of your car. What I recommend people, and it's difficult to give such trades advise people to take because of the time delay, it can backfire. What I do is, whenever the index or a script crosses RSI of 60, that is, it's moving from your fourth gear to your fifth gear. And remember, when it is moving into the top gear, it is going to be in high momentum. Okay, at that point in time, I first have to wait for an alert candle. Like here, over here, it is crossing RSI of 60. But this was on the last candle, last 1 hour of the trading day. So this was an alert candle where it has given me an indication that the Nifty has got into the top gear in the short term. I'm not talking about in the long term. Next day, it opened above this. So it has confirmed that it is now going to hold on to the momentum. At this point, I can buy a future, or I can buy at the money call option. Whatever the premium of at the money call option, you buy it at that point. As long as the momentum is holding on above 60, you can see the whole rally that you get over here. All you have to do is keep a stop loss once this is there below the candle, closing below this candle. After I have bought over here, I can keep a stop loss of the trade below the low of this particular candle. You guys are getting it? Anyone who wants to trade buying options, this is for buying options. Okay, if anyone is into selling options, you can sell a put call below this. So this is 17,200. You can sell put options below 17,200, and you can ride the rally. By the time this rally happens, that would have become zero, your put options. And if you are buying a call option, you'll get this particular rally. Now in this rally of 17,200 to whatever 17,800 we have come, if your position, what you have taken 17,200 at the money, that particular strike price will hold on. But if you have at that time bought 17,500 or 17,600, you definitely see profit in that. and you would have taken that only because the premium or the margin that you block in that is much lower. But because of the time delay, because of the 8 days or 2 weeks or whatever it has taken to reach this level, the premium of that would have come down. Okay, so for a swing trade or even for an intraday trade, if you want to buy call options, whenever an hourly chart of the index or the script, the RSI crosses 60, watch out for an alert candle. After the alert candle, whenever there's a confirmation, you can get in over there in that particular trade. And as it picks up momentum, you can keep adding. You look at this, there's no looking back. There is nowhere the stop loss has got triggered till now. There's been almost about a 600 points rally. Now, when the breakout happens over here, we don't know how much this is going to move up. But this particular trade is worth taking only because there is some assurance of movement, even if it is 100 points. Let's go back into the other past movements of these. Now, if you see here, it broke out, hourly broke out about on the 3rd of March at, in the morning itself, right? Now, this was around 17,400. After it sustained up, you would have a high of this at around 17,470 or 17,500. You got about a 300 point rally even after that. Now, a 1,700 point rally in 2 to 3 days, 400 points rally in 2 to 3 days is substantial. Whether you have done it in futures or you have done by option buying, you would have bought an option of 17,500. That would have almost practically gone up by at least 100% in this swing itself. Now, anywhere before the RSI moves out into 60, if you are buying before that, if you're buying a future or you're buying a call option in this range where the script is not in the top gear, there is extreme volatility. There are a lot of resistances. It can take days for it to move. And if it takes days for it to move, the theta decay will drop your call option premiums drastically. So even after that, if it moves up, you're not going to make profit over there. Ultimately, either you'll have to square off at your cost price or at some loss. So whenever the script is in the top gear, that is RSI is crossing 60, is when you would want to buy that particular index or that particular stock. Now, index we know has a lot of momentum. So if you don't want to do this on the index, you can do this on the scripts as well. And what are the advantages of doing in the script is very clear. Now, this is the chart of TVS Motor. TVS Motor, it's a beautiful thing is, look at it over here. It is crossing 60 RSI. They are nice bullish candles. You enter above the high over here at 1060. Even after that, even if the RSI is trying to go below 60, it is not closed below 60 on a daily basis. It is still holding on to the momentum. Even if I keep a stop loss, I keep trailing my stop loss, my stop loss has not got triggered anywhere all the way till now. This is only now that it has created a spinning top and still holding on. Here also I try to create a spinning top over here, but it did not break. So if you're bought over here and you're trailing your stop loss, there is no way that the stop loss has been triggered over here. And you know what is the beautiful part of this? Why TVS Motor, this rally has held on? Because even the daily of it was above 60. You see this? Even the daily chart was in high momentum. If the daily chart was not in high momentum, this hourly chart momentum would not have held on. So if you are analyzing charts at your end and you want to trade in futures, you want to trade in equity, or you want to trade in options, you want to buy options, the best way is to look out for stocks where the daily RSI is above 60, where the hourly RSI is crossing 60, wait for an alert candle. If the next hourly candle opens above the high of the previous alert candle, that's when you can start building your positions. And even if you have to keep stop losses, your risk reward ratio will be very apt over there. Now look at this example of TVS Motors itself. Here, it gave a breakout. I would have entered over here. Okay. I keep trailing my stop loss. There was no big movement. But in option, this movement would have been enough for me for the 1 or 2 days to trade. After that, I trail my stop loss. Over here, it gets triggered. I avoid my losses on the downside. Let me show you a couple of other examples. Now let's take SRF. It is crossing 60 over here. Okay. You buy above the high of this because this is an alert candle. You buy about the high, there's a spinning top, it comes down, your stop loss gets triggered, but you re-enter over here above the high over here. From here, look, even the RSI has been fluctuating, but look at the rally all the way up. Now, if you're an option buyer, this rally is enough for you to make money. In this, you would have made at least 30% to 50% gains. Also, remember the stock you choose to buy options, the volume has to be very high. If it's a low liquid option where there's no volume, then you will get stuck over there. And mostly if your trade goes in the money on the day of expiry and if the volumes are very low, you will not be able to square off your position. Please remember, don't allow your positions to go in the money, especially in illiquid stocks on the day of expiry. One day before, please square it off. Otherwise, you'll have to pay full margin and you'll have to take delivery of that particular stock. But if you're taking in futures, look at it from here all the way, you're getting this entire rally. Even though RSI keeps changing gears, goes into lower gears, it will only consolidate. See, whenever it goes from 6th gear to 5th gear, what happens? The stock consolidates. There'll be a slowdown in the momentum. If you have kept a deeper stop loss, your stop loss will not get triggered. But if you have kept a very close stop loss, let's say after this rally, I would have kept a stop loss here. I prefer exiting. My stop loss would have got triggered over here, but I would have made my money over here in this particular rally. After it consolidates, when it is breaking out, again getting into the top gear above 60, I will re-enter after this consolidation. When it crosses this high, I will buy again over here, and I still get another rally to trade over here in futures, even if it is in options. Now look at GMR. GMR daily broke out above this level over here around 38, 39 level. And at the same time, the hourly also over here broke out, went above the high RSI cross 60. This was a nice bullish candle that we see over here. We watch out for the next candle. The next candle crosses the high of this candle. My stop loss is below over here, below this candle's low. Initially, as the price moves on, I can keep adding more and moving my stop loss up. Look at the rally that we have got over here. Right? Now, here you do futures or you do options. The choice is yours because you are going to make money in your options in 1 or 2 days. You don't even have to hold on beyond that. And this is an opportunity where even if you want to do option buying in high quantity, you can do it. And for that, do pyramiding. Don't buy your entire quantity in the initial breakout point itself. You buy one lot. The stock sustains. It moves up a little. You trail your stop loss and keep adding more. You have almost this entire rally to eat trade in options. So if you keep pyramiding your options in such strategies, your chances of loss are very low. Even if this stock would not have moved, it would have fallen from here, you will not incur loss. Even next day it opens gap down, you have sufficient time because your position which you have taken in options over here has gone in the money. And when a position goes in the money and the stock starts falling, you have sufficient time to exit because the premium decay will not be as fast as it is in out of the money or at the money. So even if it opens gap down, your position will not get into loss immediately. You will have time to exit. You will have time to introspect the chart and decide whether you want to exit or hold on. Now this is Apollo Tires. Though, we can't do future options in this because the liquidity is very low. At 191 over here, the stock has given a breakout. This is hourly chart, by the way. This is not even a daily chart. It has given a breakout over here. This is the alert candle. Someone buys above the high of this candle. Even though you see the way the oscillators have been swinging up and down, changing the gear so much, this stock has not come down since the last almost about 8 months. If anyone is doing options or doing futures, look at the rally they have got in this entire stock. So if you are an option trader, just don't go and buy option in every breakout that you are seeing. How to select stocks which have got momentum. It is very simple. How do you identify a stock which is in momentum? Open the chart, keep a list of stocks which are high momentum stocks. Typically, these are all the future stocks only. In those future stocks, please avoid HDFC Bank, Reliance and all, because they are used for index management. Apart from that, remove stocks like, your MRF, Bosch, which have very low liquidity. Out of all, I'll share also a list of stocks with you. There are hardly around 50 stocks which you need to monitor. In those 50 stocks, whenever you see the daily chart crossing an RSI of 60, Mr. Jaiprakash, this is to answer your question. Whenever you see the stock crossing RSI of 60 on daily basis, okay, even if you don't want to take it positional because weekly, monthly may not be very strong, the same chart, when the RSI is crossing 60, you can take position in option or in futures of that particular stock at that time. And then keep your stop loss. It's not necessary. If you do 10 trades, there'll be one trade which will give you a very, very big momentum. 9 trades will give you very short momentum. But that one trade is enough for you to hold on for 2-3 days, where your options will double, triple also, if you're lucky. But saying that, you need to pyramid your option buying. You cannot buy your entire quantity in the first go itself. Let that stock sustain. Now look at Bajaj Auto. Bajaj Auto got into momentum on 31st March. It broke out over here. This was the entry candle above the high of this. Now, none of us expected a rally like this, right? So what has happened in 1 week, we can see it has gone from 8,900 to 4,300 almost. Over here in the early candle, when the RSI was crossing 60, getting into the top gear, you got this indication candle, this big candle. After that, it consolidated. You don't have to buy here. You need to wait. You need to wait for it to cross this high. Are you guys able to see the chart clearly? You cannot buy on this. This is the alert candle. You buy about 5 hours later when this high gets crossed. You buy at 3,977. Let's say you bought 3,950 call, or you bought a 4,000 strike price call. It is continuing to trend. There is no stop loss that has got triggered till now in that. If you have bought futures over here, you would have got this entire rally right now. And this is a kind of a position where you can do any quantity without worrying at all. Now, if you talk about Balrampur Chini, what we had given you, Balrampur Chini, it did give a swing of breakout over here when we entered. And above this is the level we started considering. Anyone who was doing options, you would have done on reversals from here. Okay, you would have entered over here. You would have taken this rally in options and exited. After this particular rally, it has not given a re-entry in options for now. For anyone to re-enter Balrampur Chini in an option trade would have to wait for the RSI to go back above 60. If the RSI has not gone above 60 in Balrampur Chini, you cannot do option trade in that. It was very clear. So anyone who did Balrampur Chini on a breakout, it did not sustain, but they got stuck in options big time, is only because there was no momentum in the option. For a stock, it is still easier for you to hold on because the stock is with you. There is a level, it's in a range where you can hold on, but the option would have decayed a lot. You would have lost 50-70% of your capital if you're holding options in a case like Balrampur Chini right now. You look at Cummins. Cummins has given such a nice momentum. In Feb, it broke out above in a daily basis. On a daily chart, it crossed 60. This was in Feb. Let's go to the hourly. Hourly, it gave you a breakout at this point also about this. This was the closing candle of 8th Feb. 9th Feb, you enter. Sorry, this is also daily. Yeah. So this is the closing of 8th. You know the RSI is crossing 60. On daily also it has crossed 60. You buy over here, you buy a future, you buy an option. You can't hold the option for so long. It would have expired in Feb itself. But after you have bought over here, there, even if RSI has fallen, the stock has not fallen, you could have continued trading one swing. Or even if you're triggered your stop loss here, you've got a re-entry over here. You have traded a second swing over here. But the stock has not gone below the low of this until yesterday. Yesterday was the first time it broke this low. For 2 months, people could have played in all the swings in Cummins India. And this is only possible because the long-term charts of that particular stock are in high momentum. And every time the hourly chart is above 60, you get a position, you enter, you trail, and keep playing with the swings in that. So when you have identified one particular stock which is in high momentum, you can keep playing in that stock itself in the swings of that again and again. You don't even have to, keep looking for other stocks. You have already found one particular stock. How to identify stop loss and options call? Which time frame do you usually check for RSI? Now, okay, now you're talking about how to identify stop loss in a call option is simple. I go by the candles again. I don't go by, strategies over there. For me, it is again about the candle and the RSI. Now, if you see, I buy above the high of this over here, right? I have entered. Now the stock is going up. I keep increasing my stop loss. I would have kept my stop loss below the low of this particular candle after the momentum picked up. Here it got triggered. I exit for once. Maybe if you are a little more conservative, you would have kept a stop loss once, this negative candle happened, it recovered from there, it started picking up. You would have kept a stop loss below the low of this candle. So you exit here itself. Okay, so you have booked your profit here while you have entered over here. You have entered at 1612. You have exited somewhere around 1664. You've got your 50 points trade over there. Then it consolidates. It's consolidating. It has not given a re-entry. It is falling again. After that, it has not given you a trade at all. So which time frame do I look for? As I told you, first I look at a daily. If per daily RSI of a particular stock or index is above 60, that is the best case scenario for me. After identifying a stock which has a RSI above 60 on a daily, I look for the hourly RSI to break above 60. The moment the hourly RSI goes above 60, that stock goes on my swing or extreme short-term watch list. And then I trade in that. I look for a signal, I take an entry in that. If you are an extreme short-term trader, if your hourly RSI is above 60, you can also look at a 15 minutes chart. And in the 15 minutes, when RSI is crossing 60, you can take an option position in that, do your intraday trade, and you can get out of it. Now I've got Nifty 1 hour on my right and my 15 minutes on the left. So someone who is a very short-term option trader, on an hourly when Nifty is crossing 60, which happened on 29th of March over here, since then it had come down only 3-4 days back below 60, but it didn't go and close below 60, it has sustained. This is hourly chart. When this happened on the 29th of March, I would have taken an option position on a 15 minutes over here on this candle. of 17,200, I would have made my money. I don't even have to hold on beyond that. And as the price moves up, whichever is a big candle, I keep the low of that candle as my stop loss and hold on. After this rally, I will keep my stop loss below the low of this. Okay, so at least here my profit is booked. In case this reversal doesn't happen, at least I've booked my profit here and I've exited. You getting my point here, Rishabh? That over here, since the RLI was above 60, if my stop loss has got triggered over here, I wait, then I cross and I buy again above the high of this. That is around 17,450. After that, I keep holding the position and keep trailing my stop loss. My stop loss would have got triggered somewhere here again, below
Correct.
the low of this candle.
Correct.
17,500. So Nifty has moved up about 75 points from there. In 75 points movement of Nifty, I very comfortably traded in an option buying position in that one particular day on a 15 minutes chart. So if you are a day trader, look at a longer term time frame, which is 1 hour, and then look at your 15 minutes time frame. This is the best case scenario for Bank Nifty and Nifty. Avoid that and doing in stocks because the volatility, a lot of your stop losses will get triggered. So if you are a day trader, look at RSI crossing 60 on an hourly and then on a 15 minutes. That will give you a perfect entry to trade 10-15 points on a Nifty option. Now, for me to give you this multiple time, by the time you read it, by the time you get it, you take action, the price would have already moved up 5-7 points. Your risk reward will not be appropriate for you to trade at all in that. And how to keep the stop loss? Just trail your stop loss at some point if you're not able to understand the candles, or see whichever is the 15 minutes last candle from where it turned, keep below the low of that candle and your stop loss gets triggered. Or you book your profit on the rally wherever you think, okay, it's peaking out. It's as simple as that. So if you want to do intraday, look at the smaller time frames. If you want to do swings, look at the daily 60 above and then hourly crossing 60. That's enough for you to do the trades. So that is the best way to do your option trading in buying. Apart from that, we are very comfortable selling options, which are about 500-700 points apart. You're booking a 0.5% profit every week, which is almost about 24 to 26% annually. And you are done. You don't even have to break your head over all of this. Because in this also, the number of chances of your stop loss getting triggered are at least 30-35%. If you are holding a position for the next day and there's a gap down, you have to book a big loss because it's a strategy where you would want to take higher quantity. You're not going to trade with 1 or 2 lots. You will be trading with bigger quantity over here. So anyone has any questions around this on the RSI and the time frames?
Mayur,
Yeah.
when the RSI is 0, it's the right time to buy for long term or something
No,
like
sir.
that.
RSI will not go to 0. RSI will be somewhere around 20 most of the time, below 20. So please understand, when the RSI is low, it only means that there is no momentum in that stock. The stock
Okay.
is weak. Okay. And every rise after that can be a fall.
When the RSI is 0 on a weekly basis, it means the reversal is going to happen. Is it true?
No, on a weekly basis, you cannot have RSI as 0 at all.
It will be there. If you check some charts, RSI will be near to 20. That
Will
is
be
the right
20.
time.
No, that'll be
Okay.
a time to sell. I'll give you an example of Aarti Industries. That'll be a classic example. Give me a minute. Okay. Now this is Aarti Industries. Your weekly RSI is below 40. It went lower also. Okay. When the RSI is below 40, it is in the slowest gear possible. That too on a monthly and a weekly chart. Okay.
Okay.
Right. And then your daily also, every time it moves up, it is only an opportunity to sell. It is not an opportunity to buy. In a stock like that, please wait where the RSIs of weekly and monthly are below 40. Every opportunity of RSI moving above 50 and 60 on a daily basis will only be an opportunity to go short. So if the RSI is low, it only means there is no momentum in that particular stock. That stock is avoidable to buy. And if it is giving you an opportunity, go short on it every time. Same as with Indus Towers. Indus Towers weekly and monthly RSI is below 40, which means practically the momentum is dead in that. Okay, look at it. Every time on the daily, the RSI is going up, it is a sell. It doesn't mean this is a buy opportunity. Instead of buying for this with all the whipsaws over here, wait for the RSI to come up, wait for a signal, go short over there. Voltas is another example. Voltas was both weekly and monthly were extremely low. Every rise was a sell in Voltas. It did not move up. In fact, now also every rise is a sell on Voltas until and unless it crosses 934 rupees. So if your RSI is around 20 on a higher time frame, that stock you can avoid buying completely. Okay, having said that, it doesn't mean every time it is also a rise on sell. In case of stocks like Wipro, as much as it is falling, the RSI on weekly is not going below, monthly is not going below 40. Okay, and it is giving an opportunity to buy in cash, buy small quantities in cash and keep accumulating. If you see how Infosys TCS have fallen, Wipro has not fallen. Wipro relatively is stronger than Infosys and TCS right now. So this is a kind of stock where you see the RSI at 40. It also means it is in a very value buying zone. You can start buying these. Okay, I think Rishabh, you missed it. So when RSI of Wipro is around 40, on a weekly or monthly basis, it is in a value zone. Over there, you can start accumulating a stock like this for a longer horizon in small quantities until it picks up momentum. Getting it? So RSI being low doesn't mean it is an opportunity to buy every time.
So above 60, it's always a good chance to move up.
Yeah, because it is in the top gear, right?
Yeah, correct.
Your car is in 60 on your 6th gear. That is only possible when you are on a highway. In the city, it's impossible.
Yeah.
So you know that there is a constant, momentum that you can have in your car, and there's no reason for you to slow down completely. You may have a little swings here and there because of turns or some, traffic on villages, but you'll not stop. You may just slow down a little, and again, the moment you get an opportunity, you'll zoom back up, right, on higher speed. So when the RSI is high, it only means the stock is very, very strong in momentum. Now,
From
when
60,
you exit
from
that kind of a
60
stock,
to 60 to 80, it will start moving, no?
It'll move much faster. But again, that is provided even the longer term time frames of that particular stock are above 60. If the longer time frames are not above 60, then on a daily, the momentum will get capped.
Once it reaches 80 or above 80, there's a chance of fall is more, is it?
No, I won't call it chances of falling. If your longer term time frames are in momentum and is going above 60, it will retrace. Now, in that retracement, it is not an opportunity to go short. Please remember that, because you can get trapped.
Okay.
So what can happen is it will go sideways for RSI to correct to 60 or 50 or 40, or there may be a very, a dip of over 2-3 days, which will correct and then move back up.
Correct.
Okay, I'll give an example of ABB. Now, ABB, if you see, weekly, monthly are in momentum. Your daily has corrected, it's reversing from 40. Okay, now it has given you a good candle. Now, next week, above the high of this is when you can enter. So this fall was not a short opportunity. It was just a cooling of phase for this particular stock, which was in high momentum. Now, this could have reversed even before this. So going short in a stock like this, it is going to be probably a trap, because you don't know where it is going to stop.
Okay.
Same thing happened with Cummins. Cummins, while longer term was strong, the daily came closer to 40 and it was reversing. So the car is on a highway, you're just slowing down and No. So, Mr. Jaiprakash, you call that overbought. Okay. Now, you are looking at a theoretical definition of RSI of overbought and oversold. Okay. Now, these are very old concepts of overbought and oversold. Change the word from overbought to high momentum and low momentum. Then you look at the charts in a very different perspective. Okay, every time a stock goes above 60 or 70, we consider, or we used to consider that stock to be overbought, and we used to exit that particular stock. Okay, it is overbought, now wait for an opportunity for it to fall. No, if a stock is high in momentum, it is RSI is overbought as per you, whatever the levels are, it is in high momentum. That is the time where it moves the most. So over there, trail your stop loss and hold on and look for reversal signs. Wherever you get a reversal sign, that's a point for you to exit. Another classic example for how you identify a stock which is in high momentum to exit was PFC. PFC weekly, monthly charts are in high momentum. You would consider this overbought. I consider this high momentum. We bought when RSI on a daily was reversing from 60. We bought at whatever 154, 155 levels. We held on. This high was not getting crossed. This candle was getting negative. That's when we triggered a trailing stop loss. We exited at 168 odd levels, right?
178, we told the group to exit.
160, 170, 168, 169, or whatever we have exited.
Yeah, and it just exactly reversed from
But
170.
this stock is not a stock to go short, mind you, because the weekly, monthly is in momentum. So this can now stop at an RSI around 50 or 40 and reverse again. Only when the weekly, monthly of this stock gets weak, that's when we will try to avoid this stock. For me, this stock will give me a re-entry for now. Because the market is going to move in swings, this will probably come down. It'll make a higher low and then move back up. I don't have to. It'll probably come somewhere here, making also an RSI of 50 or 40. Give me a re-opportunity to enter somewhere in this zone over here. And that's when I'm going to ride the second rally up in this.
Yeah, yeah, Mayur, for me, the very good zone to enter PFC would be somewhere between 158 to 159. That is when we can re-enter.
Yeah, so you have made your money in one swing. Now you'll make the money in the second swing. This stock is not weak. This stock is not at all weak, in spite of it falling, because the weekly, monthly are in high momentum. Mind you, it is not overbought. If you use the word overbought, you will never be able to trade in stocks like these, which are in momentum. I will show you other examples. All these are for learning purposes. So understand how RSI works and don't use the word overbought and oversold next time. Look at it from a, a high momentum and a low momentum kind of a scenario. We all know Page Industries, how it has rallied. Look at this rally that has happened in Page Industries, right? Now, in the whole phase, how many times has RSI been overbought? So as per rules of RSI, once it has crossed 60, 65, 70, we should have sold it. If you would have sold it, how would you be a part of this whole rally over here, right? So just stop looking at it from an overbought perspective. Consider to be a rally extension, a high momentum rally extension, and hold on to that. As long as your weekly and monthly were above 60, as your monthly was above 60, you could have held on to this entire rally in Page Industries. Now, if you are a trader, you would have got multiple swings in this. If you are a positional trader or you're an investor, once the monthly was above 60, there was no looking back. You could have traded this entire momentum up. Same goes with Adani. Right now, Adani has fallen, but Adani for 2 years was not falling. Everyone was saying that it is extended, it is overbought. It was overbought, but it was in momentum. In the last 1 year, nowhere it has given an opportunity for people to go short anywhere. Every time it was coming to RSI of 40 and reversing. Why? Because weekly, monthly was strong. Your weekly, monthly was strong. Adani was giving you a constant rally, number of swings that you could have played in between. Until these levels got broken, where weekly got weak, then monthly got weak. That was the time you could have avoided it completely. But until then, a stock like this, you can continue your trades. And this is on a longer term time frame. So if you want to do the same thing in options, look at lower time frames, like your 15 minutes and 1 hour charts. Once you're looking at your 15 minutes and 1 hour chart where the stock is in momentum, you please play with your options over there. So you don't have to wait for option trading in every swing that is possible. You know exactly where the momentum is, and then you trade in that. Any more questions?